Ladies and gentlemen, my name is Greg Michalowski. Today's date is September 23rd, 2014. I'm going to look at the technical analysis of the market by looking and focusing on the hourly chart. They're telling the story in a lot of these currency pairs. Before I get to that, however, let's run through some of our major economic stories for the trading session for Monday. ECB's Draghi gave a testimony today, said the Eurozone recovery is losing momentum, wasn't necessarily all that positive about the growth prospects within the Eurozone, said that they're looking toward increasing the amount of stimulus if need be to keep inflation from falling further. We also saw in the United States existing home sales come out weaker than expected at 5.05 million annualized pace versus 5.20. We saw all cash buyers decline. We also saw a decrease in the investor section of those home sales, suggesting that the prices may have reached a peak at the moment. We saw the Canada's Wilkins spoke today, and she said that the Canada may need loose policy even at full capacity. That helped to keep the Canadian dollar pressured. The pound sterling was the strongest currency in trading here today, recovering against all the major currency pairs after the Friday decline, after the Scotland referendum sent the pound sterling to the upside and then back to the downside in heavy selling on Friday. Saw that rebound a little bit in trading here today. Stocks in the United States were weaker across the board. The Dow lost 107 points or 0.62%. The S&P index fell by 16.11 or 0.8%, and the Nasdaq fell by 52 points or 1.14%. European stock markets were also down in trading here today. All right, I promised I'd take a look at some of the hourly charts, and I'm going to start off by taking a look at the euro versus US dollar. I'm going to go to my colored chart here because this is telling me the story for this currency pair. If you recall from our weekend post and also from comments last week, I got my crayons out and outlined a neutral zone right here where the price would stay above here, and then a negative side over here where the price, when it moved below, would move lower and extend lower. Now we've been in the red zone here now for a couple days now. Actually 2 days, or most of Friday's trade at least, moved down sharply on Friday and continued after a rally to the upside here to the downside and trading here today. Now I do have a few things here that are of interest from a technical perspective. One, this trend line right here. This trend line connected a low to a low to a low, and we fell below that trend line, but no momentum to the downside. So that helped lead to the rally in afternoon trading in the New York session. The other level to consider is this level right here, the 58 level, 58.59 level. That corresponded with the low price going back to September 9th. Now, as long as the price can remain below that 59 level, then I think the bias remains to the downside. If we move above that level, we could see some further short covering that could take the price up, maybe even to test the 100-hour moving average. But what we don't want to see in trading this week to keep the bearish bias intact for the euro is a move above that 100-hour moving average. That certainly would be a disappointment. Quite frankly, a move up to the 100-hour moving average would be a disappointment for the sellers through here, because we've been in this non-trending range and we're just getting to an extension below that level over the last couple days. Failed on Friday, failed on 2 times in trading here today. We got to keep that momentum to the downside if the euros has a chance to move in that direction. So watch the 59 level on the top side, move above that level. We could see further upside potential. Don't want to get above the 100 on the downside. If we keep the stay below the 58 level, and I'm biased to the downside personally, I'll look for a break of this trend line here to give you ideas for further declines. Next, the major support, 127.86 for the euro versus US dollar. The pound versus US dollar Oh, God, thank goodness, no colors. This currency pair, what do we see on Friday? We saw the huge move to the downside here after the vote came out, forced the market to the upside. That's the Scotland referendum vote. No vote sends the price higher, and then it was the sell the fact. I hate using that, but it did sell off after the fact. Came below trend line support here, went below the 100-hour moving average, again the blue line in the chart, and came down to the 50% retracement of the move up from the September low to the September high right here. Have found support against that level and dug its way back in early trading in the Asian session and stayed above the 100-hour moving average for the rest of the trading day. During the New York and London session, we banged against that 100-hour moving average a number of different times. No moves below it. That gave the A-OK for the buyers to enter the market here in late afternoon New York's trading and push the market to the upside. The next target on the top side will come in at this 163.90 level, which is the underside of this broken trend line right here. We came down, this trend line connected these points right here, fell below that level. In trading here today, we did move up to it in the Asian session, maybe early London session, but found sellers against that level. We'll watch that level again, or it comes in around again the 163.90 level on the top side. Get above that level, opens up the door for further upside potential for the sterling versus US dollar, getting rid of that hangover blues from the Scotland referendum that we had on Friday. On the downside, you don't want to see obviously the price move below the 100-hour moving average. That would be a no-no if you are long that currency pair. You wouldn't want to see that, would you? Now let's take a look at the dollar versus yen on the hourly chart. And this currency pair has been rallying to the upside in a pretty steady fashion. This is 6-year high here for the dollar versus yen, and at that time on Friday's trade, we came up to the underside of this broken trend line. This trend line connected a number of different spots through here, and on Friday when we were searching for a high price, we came right up to the underside of that trend line, found sellers, and rotated to the downside. Then we created this nice little trend line on the bottom side right here, which we're sitting right on top of it as the Asian session begins. 108.79 is that level, but we're sort of at a time where traders take a little breather. So in the Asian session, I expect to see either a move to the downside here below that line, in which case this 100-hour moving average will be a huge level. Why? Because we've only had 6 hourly bars in the month of September, actually going back to the day to August 29th right here. We've only had 6 hourly bars that have traded below the 100-hour moving average. 3 here where we had closes below, and 3 here where we had closes below. It traded a couple other times below it, but no closes below that level. So only 6 hourly bars trading below the 100-hour moving average. That 100-hour moving average hangs around the 38.2% retracement level, so it is an even more important level for our trading as we enter into the Asian session. Pay attention to that level. If we move below it, then we should see further selling pressure with the 108.12 level, and then we'll be looking for the 200-hour moving average. Now you think the 100-hour moving average hasn't traded in a while, or below that level in a while. You have to go all the way back to, not even here, all the way back to this time right here, August 15th, is that right? August 15th was the last time the market traded below the 200-hour moving average, folks, in the dollar versus yen. That's how strong a rally to the upside it's been. So it's going to be a key level if the market should further correct to the downside. On the top side, if we hold this level, and quite frankly, we're not below that trend line just yet, nor these lows, nor below the 100-hour moving average, which are our key levels here. If the market cannot get below those lows and continues its move to the upside, we'll be watching for the 110 level, then we'll be watching for the 110.67 level, the 2008 high price. Let's next look at the Aussie versus US dollar on an hourly chart. This currency pair had sold off in the Asian early London session. Concerns about China's growth was a contributing factor for that throughout the day. We did come it down to a support target along the bottom trend line here, connecting most recent recent lows, and we found some support buyers there around the 88.52 level. The level or the trend line remains the key as we head into the night session, or the early day session I should say, at 88.46. Stay above that level and the bulls remain in control. Move below that level and we should see further selling pressure in the Aussie versus US dollar. On the top side, we'll be watching this trend line right here connecting our most recent highs. That level comes in around the 89.30 level, and then up here we have another trend line here connecting this high, and that also corresponds with the 100-hour moving average at the 89.70 level. We went above the 100-hour moving average during these 2 days right here, but no momentum, and then we came down, tried to hold it, broke, and fell to the downside like you normally do when you see these moving averages. Finally, actually not finally, I'm going to take a look at the New Zealand versus US dollar. And what is key in this hourly chart is the number of times that the market has tested the 200-hour moving average over the last 3 or so weeks and held 1, 2, 3, let's call that 4. Let's call it 5 again here today, where the market held that 200-hour moving average. Remember that, folks, it's not going to hold forever. But we, as long as we remain below the 200 and the 100-hour moving average, the bias remains to the downside. We are consolidating down here near the low levels here, but we are below this old low here going back to September 15th. That gives a little bit more of a bearish push as we enter into the new session in trading, and stay below that level and certainly below the 100-hour moving average, and the bias remain, and the 200-hour moving average for that point. Given the history that we've seen here in the 200-hour moving average, that will remain until that day when we do break above it. But until we break above it, the bias remains to the downside. Now, finally, I'll take a look at gold, because I haven't looked at gold in a while. But off the hourly chart, we've been trending to the downside here. Where is that support in gold? Well, you can use the 100-hour moving average or this trend line here, this channel trend line here, as your resistance. As long as the price remains below those levels, the bias remains to the downside in gold, and we are in between the low and that 100-hour moving average, so I'm not sure you do anything just yet, but we're going to need to see a move above that 100-hour moving average and above the trend line and stay above it. We want above, we've had these little moves above it here, back here, but most of the activity is remaining below the 100-hour moving average and below the trend line, and certainly below the 200-hour moving average. You have to go all the way back to these dates in September 1st to get to a point where the last time the price traded above the 200-hour moving average. So gold remains to the downside, folks. Watch those moving averages, watch that trend line for those clues. All right, if you like this video and want to see more of them, please click on the subscribe button at our YouTube channel right here, this red button right here. And also for daily market commentary and trading analysis, you visit us daily at forexlive.com each and every day. Good fortune with your trading. My name is Greg Michaelowski for forexlive.com. Bye-bye now.